Hello, welcome to European Open Briefing for Tuesday, May the 28th. I'm Rafi Bajan at XM.com, and we're going to be looking at what's happening in the Forex markets today. The euro has come under some downside pressure following reports yesterday that Italy could face EU fines of up to $4 billion for running a high budget deficit. We're seeing the euro slipping below the $1.12 level. Sterling also coming under some downside pressure due to concerns about who's going to replace Theresa May as a prime minister. The dollar, on the other hand, is up at the moment due to that broad risk-off mood in the markets. Dollar index at 97.72 at the moment. Dollar yen slipping as the yen itself is benefiting from that risk aversion. We did see, though, a positive close in Asia in equities due to some hopes of more stimulus in China and some M&A news arriving from Europe yesterday. This morning, though, European indices are in the red due to that broad risk-off sentiment. So the euro yesterday did get a very short-lived bounce from the European election results that showed the Eurosceptic parties there didn't do as well as had been feared. There were some exceptions, like in Italy, where the League Party came top in the votes and potentially making Matteo Salvini, the leader of the League Party, less likely to give in to Brussels' demands to cut the country's deficit and debt levels. So this means another major standoff between Italy and the European Commission is looking likely, and that's pushed up Italian government bond yields, and that's pressuring the single currency. Let's now turn to the US dollar. We can see the dollar index steadily recovering over the past day or so due to that growing risk off. So President Trump is at the moment in Japan for a state visit. He's pressuring Japan to do more to lower Japan's massive trade surplus with the US. He also made some remarks on China. He said China wants to make a deal, but we're not ready to make a deal. So that's badly hit a sentiment. US markets were closed yesterday, so we're going to see the impact on that today when US markets open, and all of that risk off has driven 10-year Treasury yields to the lowest since late 2017 amid growing fears of a recession. So that's it from me. Thank you very much for watching, and have a great day.